Hey everyone, welcome back to Corporate Decoder. Today, APG just filed a Form 8, noting a merger agreement with AbbVie and I am seeing a specific price that catches my eye. Quick note, this is not financial advice, just my take on public filings for educational purposes. Apogee Therapeutics is being bought out at a substantial premium. And there is a key number that really tells the story of this deal. Alright, let's dive into this filing from Apogee Therapeutics, a company in the healthcare and biotech space. They've announced a significant event, a merger agreement. This means Apogee is going to be acquired by AbbVie Inc. It is a big deal, as you can imagine, and filings like this tell us exactly what is going on behind the scenes. So, Apogee Therapeutics, ticker symbol APGE on the Nasdaq, is being bought. The deal is with a company called Andor LLC, which is a subsidiary of AbbVie Inc. For short, we're talking about AbbVie buying Apogee. The main reason for this filing is an agreement and plan of merger. This is the official document laying out the terms of the sale. It details how the merger will happen and what will become of Apogee's shares and other forms of ownership like stock options and restricted stock awards. Now, for the most crucial part, the price. The filing states that each share of Apogee's common stock will be converted into the right to receive $135.11 in cash. This is what they call the merger consideration. This is a significant number, especially considering Apogee's recent stock performance. Looking at the context notes, Apogee's market cap was around $10 billion, and its current price was hovering just under $133. This $135.11 price represents a nice premium for shareholders, and it's above its current trading price before this deal was announced, which is often the case. This deal also involves cash for stock options and restricted stock units, meaning all forms of equity participation will be cashed out. This part is important. It says the deal is not dependent on AbbVie securing financing. This means AbbVie has the cash ready or has secured it, which makes the deal more certain. Also, AbbVie itself is guaranteeing the obligations of its subsidiaries involved in the merger. This is a strong signal of their commitment. Like most deals, this one needs approval from Apogee's stockholders. They need to vote yes for the merger to go through. Apogee has agreed not to solicit other offers, meaning they won't actively look for other buyers. However, there is a fiduciary out clause. This is a standard provision that allows Apogee's board to consider a superior proposal from another buyer if they believe it is in the best interest of their shareholders, even if it means breaking the current deal with AbbVie. This is a safeguard to ensure shareholders get the best possible price. The deal has a target completion date of the 18th of December 2026 with potential extensions. If the deal doesn't close by then, either side can walk away. Here is the penalty for breaking the deal. If Apogee walks away to take a better offer, they have to pay AbbVie a breakup fee of over $381 million. This is a substantial amount and shows how serious AbbVie is about this acquisition and how much they want to deter Apogee from seeking other bids. This section confirms that the holders of Apogee's non-voting common stock have already given their written consent to approve the merger agreement and the merger itself. This is a big step because it means a significant portion of shareholders are already on board. However, the merger still needs the final approval from the holders of the voting common stock. This item references a press release issued on the 22nd of June 2026, jointly by Apogee and AbbVie. Press releases are often the first public announcement of such significant events, and they usually summarize the key points of the deal for the public and investors. The press release likely reiterates the merger terms and provides some strategic rationale behind the acquisition. It is a way for the companies to control the initial narrative. Here we see another important document, a voting agreement. This agreement was entered into by AbbVie, its subsidiaries, and certain Apogee stockholders. Essentially, these specific shareholders have agreed to vote their shares in favor of the merger. This is another indication that the deal has significant support from key investors. This is where the actual documents referenced in the filing are listed. We can see the agreement and plan of merger itself as Exhibit 2.1, and the press release and voting agreement are also attached as exhibits. These are the detailed sources of all the information we've discussed. Now, this is a standard part of many filings, especially those involving mergers. It is a disclaimer that certain statements made in the report are forward-looking. This means they are about future expectations and plans, and they come with inherent risks and uncertainties. They are basically saying what we say about the future might not happen. The filing mentions that a key reason for this acquisition is Apogee's pipeline, specifically mentioning zumilokibart, also known as APG 777. This suggests that AbbVie sees significant future value in Apogee's drug development programs. Often, when a large pharmaceutical company acquires a smaller biotech firm, It is precisely for these promising yet to be fully developed assets in their pipeline that could become the next big revenue generators. They also point to their previous filings like annual reports for more detailed risks. This is where you'd find the nitty-gritty about potential problems like regulatory hurdles, trial failures, or competitive pressures that could impact the success of drugs like APGE 777. This section is a heads up for Apogee shareholders. It explains that they will need to vote on this merger, and more detailed information will be coming in a proxy statement. This is where they will get all the specifics about the shareholder meeting and the voting process. This is a strong recommendation for shareholders to read everything carefully before they make any decisions. It emphasizes that these proxy statements will contain crucial details about the merger. Finally, we have a section about who might be involved in soliciting proxy votes from shareholders. This includes the directors and executive officers of both Apogee and AbbVie. It is a standard disclosure to ensure transparency about who is encouraging shareholders to vote for or against the deal. This deal seems pretty solid. The merger price of $135.11 per S-share is a significant increase over Apogee's recent trading levels, as shown by its market cap and current price. The fact that AbbVie isn't facing financing conditions and has secured a guarantee from its parent company suggests a high level of certainty. The key driver for AbbVie appears to be Apogee's drug pipeline, particularly APGE 777. This is a classic pharmaceutical acquisition where a larger company buys a smaller biotech for its innovative research and development. The breakup fee of over $381 million is substantial, acting as a strong deterrent against competing offers. The voting agreement adding support from certain shareholders also bolsters the likelihood of the deal closing. My biggest concern is always the integration of these companies, and whether the promised synergies and drug development timelines will actually materialize as expected, but based on this filing, the deal appears to be on strong footing with a clear price and commitment. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.